But it's a one-way street heading towards it's a brave new world, really, in terms of transport fuel demand and the supply, availability and composition of liquid transport fuels. First of all, we can say that electric vehicles are definitely here to stay. They are going to gain prominence, going to become increasingly important in the energy mix as we go forward. Most of what I'm going to discuss in some senses is really around the European market, because Europe is right at the forefront of the biofuels revolution. What's happening in Europe is very much, I suspect, the blueprint of what will take place around other regions across the world generally in the years ahead. But here in Europe, we are now well embarked on a road to alternative fuels, renewable fuels, green fuels, and of course biofuels. This year, the EU, the Commission, introduced RED II 55. 55 here is a direct reference to the ambition to reduce greenhouse gas emissions by 2030 by 55% relative to 2008. And it obviously focuses very heavily on the transport sector, reinforcing the ambition to reduce emissions from road fuels. The EU Commission has established a CO2 emissions target, a tailpipe emissions target of just 42.5 grams of CO2 per kilometre driven by 2030. Really, across the fleet generally, there's only really one way of reaching this. The main way is, of course, to electrify and to displace fossil fuel outright by pure electric vehicles, and this will definitely take place. We're relatively conservative, I believe, in our projections. At the moment, really take-up of these technologies require fiscal and financial incentive, either outright subsidy, tax incentives, tax advantages, and the consumer really has to be encouraged to buy what is still a much more expensive technology. And there is, of course, the whole issue of recharging infrastructure, which frankly is developing, but at the moment remains very inadequate to support the widespread rollout of electric vehicles, pure electric vehicles. Nevertheless, the ambition is that by 2035 all new vehicles will be zero emission. The vehicle fleet is not really expected to grow a great deal in Europe, but electric vehicles are going to become, I think by 2040, definitely the predominant fuel form or the predominant propulsion system. And it's really just a question of how quickly we get there, what the pathway looks like. So what it means for the demand for fuel, for diesel and gasoline, at the margin LPG and other fuels, but really Europe is a diesel and a gasoline market, as it is in most countries or most regions. It means that fuel demand is on declining trend now. It obviously collapsed heavily in 2020 because of the pandemic. It's bouncing back at the moment, but really I think we're pretty much close to peak demand in terms of transport fuels, and the demand is going to inexorably decline in the years ahead. It's going to decline by around 30% by 2040 on our projections at the moment, which is a compound decline rate of around 2%. You can see from the chart here that gasoline takes the brunt of the decline. Diesel is still in our projections pretty well supported by commercial vehicle usage, where the potential to introduce alternative non-fossil fuel technology is much more limited. If we just look at it and think of it in terms of the wider environment for oil demand, it's what I've just shown you in Europe is very much part of a peak demand story. Peak demand is inevitable under the strategy and the ambitions and the targets which are being adopted across the globe, but most particularly in Europe, North America and the more advanced OECD countries, or the more mature OECD economies. We think that demand, it's 2019 demand was 100 million barrels a day. In 2023, it's probably going to get back to above 100 million barrels a day. The current COVID-19 scenario permitting. So we're back to 101, 102 million barrels a day. By 2026, we get to maybe 104 million barrels a day. And frankly, that's it. After that, demand plateaus, and by 2030, 31, something around that point in time, we think that global demand will be declining on a structural basis. The decline clearly will be very heavily focused in these early years in the mature Atlantic Basin economies. Demand is still going to grow in Africa, Latin America, to some extent in Asia and the Middle East. So it's not a uniform picture by any means, but globally, peak demand is within 10 years of where we stand today. But we're still building a lot more refining capacity. There's something around 4 million barrels a day of new capacity, distillation capacity, due to enter operations over the next 3, 4, 5 years. And there's probably something around 4 million barrels a day of upgrading capacity. And if you combine that with the fact that we're still operating a refining system globally at levels well below the normal level of utilization measured on an annual basis, then clearly there's a considerable amount of capacity to be utilized in the face of what looks like a very anemic demand outlook. We've done some calculations, they're very indicative, but the indications are that if we were just to take the current refining system plus what's being built and compare that to our projections of demand growth, then we've probably got structural surplus of around 4 million barrels a day or so. Most of that actually is already accounted for by capacity closures. We know from recent events, recent announcements, that there's about 3.2 million barrels a day of capacity measured at the distillation at the CDU, which is due to close. It has either already closed or it is going to close in the foreseeable future. And this represents plans by companies to downsize, to downgrade, to refocus away from less profitable refining and seek alternative uses for these assets. This probably reduces the system to a surplus of only about 1 million, but as is illustrated in this chart, as demand growth peters out, plateaus and begins to fall, so inevitably surplus capacity starts to build again. So we're looking at a refining system that is definitely going to be plagued by structural surplus, a structural surplus which, if anything, can only grow larger with time. So companies are re-examining their options and their strategies. I've already mentioned 3 million barrels a day of capacity illustrated here is or will close, most of it in North and Central Europe, a lot of it in North America, and quite a bit in Southeast Asia and Australasia, for instance. The other regions so far are relatively unaffected. Some are outright closures, some are conversions to import terminals, but I think the point that is of particular interest to us is just how much capacity is being repurposed for the production of green fuels, biofuel capacity. So these are companies so far mainly in Europe who are taking conventional refining assets and they're repurposing them, reinvesting in the facilities so that they no longer run crude to produce conventional fossil fuel product, but they take in bio feedstocks in order to produce renewable, carbon-friendly biofuels. And biofuels, therefore, are going to be an incredibly important component to meeting a carbon-free future, to meet the ambitions to reduce carbon emissions and greenhouse gases. If, again, just focusing here on Northwest Europe, against the background of a declining profile for for transport fuels generally, then the bio component is just going to continue to steadily rise. Currently, it's probably around 7% or so across the region as a whole. By 2040, it's going to be at least 20% and could be even more. And it's not just transport that is now going to adopt biofuels as a key strategic element to a decarbonising future. Aviation is also joining the game. Marine fuels is joining. And even if we went further downstream, if you like, into the petrochemical sector, even here, producers are looking at ways of reducing carbon emissions by recycling waste plastic material to make naphtha in order to crack naphtha again in the crackers and make more material. So all the traditional markets for oil products are in a state of flux. They are going to change beyond all recognition. It's a question of how fast, not a question of when. So on that, I'm going to stop, and I'm going to hand over right now to Fabrizio, who will start the main task of talking you through the future for biofuels.
Thanks, Francis. Thanks very much for the introduction. I'll start then talking a bit more about the European biofuels market. And the markets have been crazy at the moment. So it's a quite interesting market to keep an eye on. Most biofuel prices hit record high levels in September. They increased by another 10-20% in October, and they stayed very high during most of November, although slightly down in October. And there's been both on the biodiesel and on the bioethanol side, and particularly ethanol has been quite volatile, with a combination of low availability for spot purchases, stronger demand, and feedstock prices at multi-year highs. But before we look a bit more into pricing, let me show you a few other things around that I think are critical to the market. The European market is a lot around regulation. There is a Europe-wide directive that is still being transposed into national law, and each country has the chance to adapt to keep the minimum requirements, but to go a little bit further according to what's available in terms of feedstocks and products. And in the current moment, there's significant variability across countries, and some countries haven't completed the process of transposing the directive into national law, but still there is an update to the directive under discussion. And one of the key elements of this update is that the legislation that is currently focusing on volumes could shift to GHG reduction, which then would have significant impact on the biofuel and feedstock mix across Europe. Another critical thing that is shaping the market at the moment is the possibility, the target to reduce feedstocks that have high indirect land use change, ILUC, That's primarily palm, but soy is also being under question. There is a target to gradually phase out palm-based feedstocks, but palm-based biofuels between 2024 and 2030, although several markets have already decided on an earlier phase-out date, including France and Austria that have already banned the use of palm. And finally, I'd like to mention that there's a strong push in the region for sustainable aviation fuel, SAF, with some country-specific mandates already in place. There's France starting with a 1% mandate next year, and there's a Europe-wide target proposed for 2025 in the context of the Renewable Energy Directive revision, but that's still going to be, it hasn't been approved yet. So if I can start now into more, going into some of the products in more detail, let's start with biodiesel. As I said earlier, phase zero price hit record high levels in October and early November, and because winter is approaching, we will see a stronger use of rapeseed oil, which is the grade that had the highest price jump last month or over the past few months. So because of that, biodiesel prices are likely to stay at these very high levels for a bit longer than expected. There's limited availability of rapeseed in Europe currently. Biodiesel production slowed down in August because of a catalyst shortage, and that is all making biodiesel supply very, very tight. As I said, there was some catalyst supply shortage in the region that affected biodiesel output during the summer months. We have in principle estimated that biodiesel production was cut short by 20 to 30% during August and October. The situation is less critical now, but it's still not solved. And that's why we see a gradual increase in demand over the next few months, which wouldn't really be the case in a normal year, as biodiesel blends are typically higher in summer than in winter, although it's not a huge difference. But we would see slightly higher volumes in summer than in winter, but not this year because things haven't been as normal on the supply side. If we now jump to HVO prices continued to rise in Europe, and they've been rising since the beginning of the year. And that was partly because of rising phase zero prices, but also because there has been a significant increase in ticket prices of greenhouse gas reduction certificates, which they kind of set a ceiling for HVO. HVO production has not been impacted by the catalyst shortage as biodiesel has, but HVO supply is still very tight in Europe, and HVO demand tends to increase slightly towards the end of the year, so we would expect prices to remain firm during winter as well. Maybe it's worth mentioning here that SAF is also in a very similar situation, tight supply, increasing interest. Prices are very high at the moment and likely to stay high for quite a while. Now we could look at demand for HVO, which is still smaller than for biodiesel. Last year, we typically had, in any given month, 75% biodiesel, 25% HVO in volume terms. But in September, October this year, it's got close to 60-40, 65-35%. It's a difficult comparison because some biodiesel production has been curtailed, but it still shows how interest for HVO has been on the rise. Starting September, we are seeing HVO demand above 550 million liters, half of these coming from crop-based feedstocks, and another half from UCO, tallow, pommet, and other waste-based feedstocks. And actually, it has been an alternative for rapeseed-based biodiesel, because for the first time since we assessed both prices, HVO class 1, which is the crop-based grade, has been priced below IME, which is a biodiesel grade.